All right, hello everyone. K Kim here, and thank you for attending our live midweek event. And for those of you watching the recording, thanks for watching as well. And so today we're like something we always do. We're going to look at the market indices, and we're going to look at the minor term, intermediate term, and the primary term, and see where they at. Well, with the move today, it's just really hard not to be bullish at this point. I mean, but I've been bullish for I don't know how long now, but minor term, intermediate term, primary term, we're all in a bullish sentiment today with the move today. So we'll talk about that. We'll look at our usual indices: Spider, Qs, Diamond, the Russell. Mid cap's been a key index as well, so we'll look at that as well for a time. Something we always look at on our midweek events will be Tesla and Apple. We'll look at that. And then, I promised you guys last week that we'll follow up with some of our positions that I talked to you about a few weeks back in our midweek update or live midweek update. I talked about the setups, talked about the position trading setup, talked about the big picture and kind of zooming in, figuring out your setup, understanding your entry, understanding your stop, understanding your target, understanding your time frame to hold. And so, some of those names, we're going to talk about that as well. These events do go long, and so, you're feel free to come in and out throughout the day. And so let's do that. Let me go ahead and share the screen here. Again, if you have any questions throughout, feel free to use your left panel chat thingy there, and I'll go ahead and address that as well. So we're looking at S&P 500 here. I mean, I just, whatever I said last Wednesday, seriously, I'm just being very honest with you guys. Whatever I said last Wednesday, that was like this right here, when the market was like right here. I believe it was right there. Okay, that was the last Wednesday update, right? It was a video, it wasn't a live event, it was a recorded video, static video that I put out every other week. In between we do these live events. When I did the analysis on the market indices, as far as a sentiment is concerned, not minor term. I'm not talking minor term. Yes, things gonna go ups and downs. It's gonna have its fluctuations. Yes. When I did my analysis last Wednesday, that analysis alone, I don't even have to repeat it because it's same. The sentiment that I did on last Wednesday and today, that's what we have to understand. If you want to become a position trader, not day trader, not short-term swing trader, not going things for a couple days and few days, call yourself swing trader. I'm not talking about that. You want to hold things 6 months, 3 months, maybe to a year. This right here, that's not much. I mean, yeah, market is going to go have its ups and downs. But what I said last Wednesday, again, I'm not trying to say I called it, I told you so. That's what I'm trying to get it. Please don't look at it that way, please. That's not what I mean. Even if I was wrong, even if it kept going lower, at the time, that was, I believe that was a good analysis at the time, because we're still in the vicinity of a high and low, right? Low, this is a high and low. I mean, we didn't know it was going to bounce, but given the fact that, hey, what did I say? I say, hey, we're at that. This is a 100 SMA, by the way. That blue line here going across, that's 100 SMA. And if we just look at that 100 SMA, there's a reason why I removed all my other moving average and I just put up a 100 SMA, right? If I just go like this, and if I just go line chart like this, and if I just go do this, you can call these, whoops, I copied it from someone. So let's say you didn't know anything about technical analysis. Let's just say all you knew was daily 100 SMA. right? 100 SMA meaning simple moving average, right? Simple moving average, and you just told yourself, you know, I'm just gonna buy when it hits the 100 SMA. You're right every single time except one time, right? Every single time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's about 97.5% chance, percentile that you're gonna win if you bought it at 100 SMA. That's a trend. That's an option. That's an option that we need to obey, we need to respect, and we need to honor. And I think it's very important. And there's more to it. I get it. There's more to it than just 100 SMA. But when it comes, when the market is an uptrend, we have to respect the fact that when it is pulling back, again, can it pull back to make, you know, maybe something like this and create a topping pattern? Yes, it can. Anything can happen in the market. It's life. Anything goes. But that all we have is the probabilities, right? So when we get up, when we pull back, a lot of times pulling back to create what? To create a higher low. And when it goes up, pulls back, it is pulling back to create a what? Create a higher low. And that's exactly what we've been doing last how many years? We go up, we pull back, higher low. We go up, pull back, higher low. We go up, pull back, higher low. Up, pull back, up, pull back, up, pull back, up, pull. And so that's an uptrend. So as long as we're in that primary term uptrend, we have to give benefit of the doubt to the buyers in a primary term. Intermediate term, same thing. Intermediate term, because we're so prolonged now, intermediate term, I would have to say as long as we're above 100 SMA, intermediate term, we're bullish in the intermediate term. Right? Usually it's 50 MA is the good gauge for, you know, for gauging the intermediate term trend. But because S&P 500 has been such a prolonged uptrend, right? And so that 100 SMA has been that key, you know, moving average here. Let me just put in my other. Oh, let's remove that one. Yeah. So we got all these other moving averages here. So it's interesting to note that this was also the vicinity of a higher, uptrend area, right? So that we found support here, we found support there, we found support there, coinciding with that 100 SMA, right? Also, this was the area that came to 50% retracement, exactly 50%. If I measure that move. Remember we talked about how to use Fibonacci maybe 3 sessions ago? If you want to watch that, you can go to my blog, go to videos. I think it says how to use Fibonacci. You gotta find it. It's one of those videos. We talked about it. As long as we're in that Fibonacci retracement zone, right? And this is this level. As long as we're here, this is what I call FRZ, Fibonacci retracement zone, which means that's a territory of higher low. We can pull back to that level. As long as we bounce off of that level, it is considered as higher low. So we did that. You know what? Another thing we did here at the club. I'll show you. There's another analysis we did, which is a candlestick analysis. And so all these analysis, it helps you kind of give you that idea that what level could be that possible potential higher low level. Does not mean that you just call things, you guess things, because that's what people love to do. They want to predict stuff. I don't like predict things. I like, what I like to do, it's not that I was predicting the bounce. It is a different, I'm not saying that, last Wednesday, what did I say? Did I say, watch, mark my word, guys, it's gonna bounce? That's not what I said, because I do not know it was gonna bounce last Wednesday. That's not what I said. I didn't say that it was gonna bounce. I said this is the vicinity. If it is gonna bounce, this is a level, right? This is a territory of higher low, which means if it does bounce, we have a good probability we're gonna do it in this vicinity, right? I didn't say, hey, go along here, guys, because this is a level that's going to bounce. Mark my word, I know. That's not how you do your analysis. And that's not how you listen to people whenever they say stuff like that, because that's not what, that's not how you do things. So I just thought I would show you this. For educational material, not in a way that I want to show off or nothing like that. So we just did it, we just looked at rising uptrend. We just looked at Fibonacci 50%. We also looked at the territory of a higher low. We looked at the 100 SMA, and we looked at all of that. And then now we're gonna look at the final. We're gonna look at the final analysis of candlesticks, right? And a lot of times, you know, this candlesticks right here, that can be bear flag. That can be bear stair step. And I hear weirdest things. You know, people say weirdest things. You know, when you go around looking at different people's videos and stuff, you know, that somehow we're gonna come back here and retest this level for like they know for sure. Like, how do they know that for sure? You know, they're like, well, mark my word, I know for sure at least we're gonna come back down 204, and and that's what some people, some traders were saying, that that's what's gonna happen on this day. Like, that person just knows, and even if that happened, it's just they got lucky. Nobody truly knows. Right? And we, you know, a lot of people are talking about this is a bear flag. Yeah, it is. It kind of looked like it, but you have to see when we're doing you know, when we're doing technical analysis, especially when we're doing, you know, candlestick analysis, what we have to understand is, did those bear flag type of pattern or bear stair step or you know, bear, you know, short-term consolidation pattern, did that play out in the past? That's very important. You have to understand that. You want to study that. So last several times when we had these kind of sideways move, which can be considered as some kind of a bear flag, bear stair step, terminology isn't enough. I mean, isn't important. Okay, please do not fight with me. I don't believe that's that terminology. I don't believe that's that. That doesn't matter. If it's inverted head and shoulder, if it's head and shoulder, if it's double top, triple top, that does not matter. The sentiment that it carries, that's what it matters. So when I say certain terminology, if I use certain terminology, doesn't mean that that's important. That's not important. What is important is the sentiment that it carries. But I don't want to explain the whole thing, whole sentiment, so I just use the terminology that this is certain pattern. I don't know. You know, I just don't like when people, well, I don't agree that that's that pattern. It doesn't matter what pattern it is. It is a sentiment that it carries that matters. So anyway, so, you know, when we look at these kind of a bear flag in the past, or bear stair step, or bear consolidation, it didn't play out. It didn't play out, which means it is more of a bullish, sentiment rather than bearish. Can it still break lower? Yes. So when this chart and this analysis was done in the club, I didn't say, mark my word, it's gonna bounce. Mark my word, it's gonna happen. You know how I know? Because I'm God, right? No, I'm a man. I'm no better than any of you guys. All I know is I can look at the market and say, well, this is a good level. Looking at 100 SMA, looking at Fibonacci 50%, looking at rising uptrend support, looking at Fibonacci retracement zone, looking at the territory of high or low, and looking at candlestick analysis, this is a good level that we could have high probability that, you know, it could possibly bounce. That's exactly what I said. Not that I know for sure that it's going to bounce. Right? I mean, this could have still played out to the lower. And look at this candle. This was like during the day when the market was most bearish. So it was about 10:57. So about 2.5 hours, well, Central Time. So 2.5 hours after market open, when it looked most bearish that day, during that day. I think towards the end of the day it got up though. Yeah, so you can see we had a little bit of wick here. But on this day, it looked pretty bearish. Like it was completely demolishing the night before, the day before's gain, right? That's exactly what it did. So I put this chart out not in a way that I want to call things, but I want to kind of put in a perspective that, hey, this is a good level that we could possibly have a bounce. Does not mean that it's going to happen, because nobody truly knows what the market is going to do. But we have a high probability that it's going to do. And this was, again, this was just a few days back. Actually, 3 days back. So, I think just sticking with the trend, sometimes we're too smart. What I mean by that is we're thinking too much. You know, we're overcomplicating things. It is complicated. Technical analysis is very complicated. You know, there are so many things to think about. But it's what you bring, like what I always say is that, you got all kinds of ingredients here and you're putting juice together. I've been juicing lately. Well, I've been doing it for a while actually. But anyway, you put all the ingredients together and then juice comes out, and then you drink it. It's pretty simple, but those ingredients, that you put in, sometimes it has to be strategic, what ingredients you put in for taste, for health, and all that stuff. But then, once you do that more, you do it a lot, it kind of becomes a pretty simple thing to do. And, I think sometimes you kind of have to treat the market that, you got to look at it like it's been happening, so it's going to continue to happen. And we can't overcomplicate things. All these analysis on TV, they can sound so impressive. They can sound so smart with the economical data and what's happening in Russia and what the Fed might be doing. And they sound so smart. I'm not taking away that they're not smart. They're probably is very smart because I can't do what they do. I can't do all the data and pull up the data. All I can do is I look at the chart and say, hey, and I think that's this advantage for us. For somebody like us, just we don't have the power or the means to get all the information what the Wall Street has and what all these big name fund managers can possibly get, because they can get information a lot quicker than us. That's for sure. So what's the advantage for us? It's a technical analysis, right? So, I really don't want to spend too much time on the indices because we're in an uptrend. With today's move, we confirmed higher low. We're above 10. We're well above 1020 MA. And you know what? Because with the Fed's meeting today, and it was a very emotional move today, so there might be some kind of emotional sell-off tomorrow. We might gap up to resistance level, and then it kind of makes everybody all hyped up, and then we just do something like that. I'm not saying that's how we're gonna close. We might even do that during the day, and then we get a long wait towards the end of the day. Again, I don't know, but that could happen. So don't worry about that. Don't worry about what's gonna happen next few days. Don't worry about what's gonna happen tomorrow. Just look at the big picture. We're still in a higher low high. As long as we're in a higher low higher high, we're in an uptrend. You got nothing to worry about. If you're a long-term trader, if you're a position trader, if you're a day trader, well, it's a tough spot here because we could have volatility. A lot of times when there's emotional, move like that, or it could be just another grind. To me, we might have just another grinding move. Just frustrate the bears as much as you can. Just grind, like stuff like this. This is what really, really gonna frustrate the bears. It just doesn't do anything. And then we get this, and then we grind, pull back a little bit, hit that resistance, kind of old resistance becoming new support, and then go back up a little bit, pull back a little bit, go back up a little bit, and then have a big pullback, and then people say this whole market is gonna crash again, and then I have to come to you, we're still in a higher low, higher high, and then 100 SMA comes, and then we bounce back up. I'm not saying that's exactly what's gonna happen. I don't know. I really don't know how it's gonna play out, but I can see it that it could just something like that could happen. I don't know when the top's gonna be. I don't know how long this thing is gonna continue. All I know is I'm gonna respect the trend, and I think we're gonna continue higher. One of the things that we've been talking about here in mid caps has been that key index. One of the things about mid caps is that, one other thing about mid caps is that we have that kind of again, terminology, formality is not enough. What I'm trying to do is I want to save my time so you guys know what I'm trying to say here. If I try to make you guys understand, well, we had a lower low here and then kind of equal highs here, and then it turned around and creating a higher lows and higher highs. And that's a long, I have to explain all that, so I just said in for head and shoulders. So again, terminology, formality is not enough. It's not important. It's the sentiment that it carries. The sentiment that it carries is no longer creating lower low. It carried higher low and higher high, and that's what infrared head and shoulder is. So it's not, you know what I'm saying? So anyway, we had an initial confirmation. What is a full confirmation? Remember we talked about that a few sessions, maybe several sessions ago. If you guys forgotten, this is an initial confirmation because we broke above this neckline, and then when it comes back and retest the old resistance as a new support and bounce back up and creates a new high, that is a full confirmation. We have full confirmation on mid caps. This is a very, very bullish sign. can anything happen? Can we have like some bull trap here and then like, you know, do that? Yeah, but it's very rare. You know, that's what bears always gonna call things. You know, like this. Oh my God, that's a bear trap. No, it wasn't. That's a higher high, and then we create a higher low, and then we did that. That's not a bear. That's not a bull trap. That's just a higher high that it created. Minor term, right? So sometimes you hear things, and you just gotta completely like knock it out. You just completely like, I don't even want to deal with that. I don't even want to dossel with that. Same thing in life, you know. It's interesting how market and life so connected. You know, people say things to you, you know, well, you need to do this, you need to do that, or, you know, negative things. Sometimes you just gotta like chuck it, you know. Don't even listen to that. That's what you gotta do sometimes. People must tell you things about this market. It's gonna do this and do that. Sometimes you just have to, like, no, I don't care what you say. I'm just gonna listen to what the chart says. The chart says we're still in a higher low and higher high. We're still above moving averages. Mid cap just broke out. Mid cap just confirmed inverted head and shoulder. Mid cap just had a full confirmation inverted head and shoulder. We're bullish. Whatever, despite of what people say, you know, what people gonna say in the news and stuff like that. Again, I'm not saying that these guys are dumb or stupid. I'm not saying that. I'm sure these guys are very, very smart. But they're not doing what we're trying to do. Who knows what they're doing, right? Who knows what they're doing? You know, they get paid for coming on TV and doing analysis for big companies, but you and I, we don't get paid for doing that. We gotta make money on, you know, trading. And so I'm not gonna go too much into indices. Obviously, I say we're gonna look at all the other ones. I don't even have to look right now. I just they're bullish. Minor term, you know, intermediate term, primary term. You know, Russell, same thing. You know, you can see right there, and you know, higher low, higher high. I mean, you know, can we have a double top here? Okay, well, this might be a double top and do this. You know, that's the thing, is that when you do your analysis like that, your life is very, very not happy. You know, because you're always fearing things. Don't a lot of people do that in life too? You fear things. Oh my God, okay, I'm gonna lose my job. Oh my God, my business, you know, we're gonna lose that contract. Oh my, don't do that. Deal with it when it happens. This is how exactly people do. Oh my God, okay, we're gonna have a double top here. Don't do that, please. We're not there yet. When we get there, we'll worry about it when we get there. Don't start like worrying about it then. Even if we start to pull back, it's not going to be confirmed until we get below that level. And in today's market, initial confirmation is not enough. We need full confirmation. And right there, that's not a primary topping pattern. That's still going to be a minor term topping pattern, maybe even intermediate term. What you should be afraid if we start doing this, then you should be afraid. And that, how long do you think that's going to take for it to, you know, for it to form? It could be 3 months, and by the 3 months, if I start to see something happening, I'm going to close all my positions and get out. But let's not worry about the data that is not there. Remember, tangible data that I always keep preaching, it's that tangible data. This is a tangible data. We have data that is at hand. We have this data. Other data that I showed you guys is not there. Oh, what did I do? Oh. Yeah, it's not there. So I think Russell, something that I talked about in the beginning of this year, I think Russell is going to be the key index for 2015. I wrote an article in like late December, and I think Russell is going to become that leader, like 2013, 2014, and I think that leader has been born. Leader has been born. I remember we talked about it here at the club. I think on this day, we talked about the leader has been born. I think the Russell. So the two key index I can give you guys right now to follow until we get some kind of crazy topping pattern, which it doesn't look like it right now, is the Russell and mid caps. I think those two will be your key index to watch and to follow. You see that S&P 500, Dow Jones, Nasdaq maybe even to lag a little bit, but I think the Russell and the mid caps will continue to lead, because they have full confirmation. Russell has a full confirmation as well. You know, it's a bit ugly, but we got that. We have that initial confirmation. We pull back to the neckline area. Again, it's a bit ugly. It's not like textbook. Again, textbook is not important, but we have higher lows and higher highs. We retest that level, and then we made a new high. We have a full confirmation. So Russell and the mid caps have a full confirmation as of today that they are breaking out. If I just give you guys weekly chart real quick, let me bring it from my other screen. This is a weekly chart of the Russell IWM. You can clearly see right there, very, very, you know, it's perfectly respecting that technical level. If you go to line chart, it'll even line up better. Left shoulder, head, right shoulder. And I understand, you know, why this is an infrared and shoulder. Because infrared and shoulder, usually what you usually see is usually you will see it in a downtrend, and then it becomes reversal to the uptrend. That's usually what happens. That's kind of usual case. That's a textbook. But again, this is a market. You're not gonna have a textbook scenarios every day, right? So that's like, and nobody can write a book regarding life and tell you if this happens, this is what it means. You can't do that because everybody's different. You know what I'm saying? That's the market is same way. It's like life. It's life. You know, it's not that this thing just got created by itself. We did this. People did this. People trading. People like you and I. Their emotions are part of this. The fear, the worry, the anxiety, the greed. It's all there. We created all this. And because of this is life, we can't always have this textbook patterns, and it's gonna play out like textbook, right? Nobody can write a, you know, textbook on life and say, well, you know, if your wife and she's pissed off at night because this and that, well, she's getting her period. I mean, you know, that's not always the case. Maybe you were not loving, maybe you were mean to her, maybe you know what I'm saying, you were not taking care of her, maybe you're stressed out about your work and you didn't know, and your speech is mean, and I mean, there could be a lot of things. It can't just be one thing. So that's kind of how, you know, I look at technical analysis, is that you can't just bring textbook and say this isn't that, this is that. You know what I mean? It's much more than that. So that's all I'm gonna do for the indices, and we're gonna go ahead and look at Apple and Tesla and other stuff. Any questions so far? Anyone? Any thoughts on the market? I'm trying to be more, you know, how do you say it? Interactive. I feel like I'm always talking like a couple hours. Any thoughts? Anybody? No thoughts? All right. Well, thoughts are coming in. We're listening. Really interested if you think Apple's bear flagging. Is it too late to enter SPY calls at this point? We'll look at Apple right after this, so I'll look at that. Probably with the current move, probably is not bear flagging, but we'll look at it. Remember, like what I said, remember the chart I showed you, you can't just rely on these patterns. You gotta look at the past and see if it worked out. You know, these are all bear flagging that never worked out. It wasn't bear flagging anymore. This was becoming more of a like reversal pattern almost. So you almost defied the textbook pattern and it became a reversal, completely opposite thing. Isn't it interesting how this was a negative thing became a positive thing? It's interesting how it happens in the market, and it also happens in life. What people could see as negative can turn it into a positive. Your struggles, your suffering, right? That's a negative, but that can turn into positive. Even in just my life, I'm not gonna talk about my life story. So there's a little thing in my blog, there's about us. I did share a little bit what I used to do, how I came up. But what look like 7 years of suffering turn into a blessing. And am I going too deep with that? You know, I'm kind of a wannabe life philosopher, so I like to think like kind of like that way. I don't know, it's weird, but I enjoy thinking like that. But you know, so what was, you know, supposed to be negative, right? Yes, what's supposed to be negative became positive, and you know what I'm saying, that. So it's not so much just what that is, you know. It's, you have to understand the past behavior. Is it too late to enter into SPY calls at this point? Again, you know, it's your time frame. How long are you willing to hold? Are you going to hold this for a long time? Are you going to, you know, where's going to be your stop? You know, I can't. I mean, if you're going to just do it for a couple weeks and then you know, if you're going to day trade, definitely this is not the level. If you're on a position trade, you know, you could possibly do that. You know, potentially you could place your stop, you know, below here. Remember two-part trigger system we talked about last week. You know, kind of incorporate that. You know, and then you know you can possibly go long here, and you know you can look at, you know, some of the targets. Remember, if you've been following me, I'm not going to go into how to do targets right now, but do your targets. Look at your Fibonacci expansion. And then you know, kind of stick with it. You can. It's not too. If you're position trading, it's not too late. If you're swing trading, like a couple weeks, I think it would have been better, like just right about here or so. But if you're position trading, it's not too late. You know. Utilities. Let me see. This isn't utilities. Is that something else? Do I have utilities here? Is this, Kenny, is that what you're talking about? Okay, is this utility? I have no idea what this is. I've never seen this. I don't know what that is. All I know is this one of the characters from Street Fighter. Anyway, XL, yes, that's what it is. That's the utilities. Oh, they're same thing. Oh, okay, interesting. Oh, okay, only thing I don't like about this is that, okay, first of all, if you look at primary, so when you're looking at higher lows and higher highs, this is a good question. What you want to do is you got to look at, you got to look at all terms. You got to look at primary terms, intermediate terms, and minor term, right? So if we look at primary terms, this is a potential level. This is a potential level of higher low. However, if we look at intermediate term, are we still in the territory of a lower high, right? So let's say if this does this, then that's a lower high, right? If you ask me, well, I don't want to go long here. Basically, I don't want to go long here because we're still in a downtrend in the intermediate term, right? We don't know that if it's going to roll over. So if you ask me, well, what would you go long? When would you go long? Well, if you ask me, I don't know exactly how it's going to play out, but let's say if it does something like this, right? And if we can hold above that for a few days or so, then now it looks more like inverted head and shoulder. That's a textbook inverted head and shoulder because we downtrend, lower low, lower high, higher low, higher high. You enter, stop here, position trade, right? Yeah, so that's what I need to see. Like something like right here, right there. Your entry is right here. You do your analysis, target analysis, Fibonacci expansion level, and then some of these levels you close it out, add some here, close it out some here, so you could have position trade this way. Left shoulder, head, right shoulder, entry upon breakout and holding above. Again, it's not about, that's again something that I say a lot here is that What's more important than the downtrend resistance? What's more important than uptrend support? Because these things get broken all the time, but you know sometimes it's not about that. Lows and highs is the most important, right? I mean, yes, resistance downtrend is broken, but you've never seen this thing do this and you have to redraw that again? That happened to me a lot. I'm sure it happened to you a lot too, right? How many times you went long because it broke the downtrend and it didn't work out? How many times you short because it broke the uptrend and it didn't work out? How many times because you neglected the lows and highs, right? So many times, you know, there's times where we broken resistance and then you have to redraw that support, right? I don't want to find an example right now, but there are tons of examples. I've seen this so many times. You know, maybe this. Here, quick example here. Right, you could have drew that, or you could have even draw. Here, let me actually do this. There, and then you draw this. Right, and then you say that's a double top, K. And we've broken the neckline, so I'm gonna short or something. Okay, and then you say, yes, see, I was right, K. I short here, we broken rising uptrend here, and this rising uptrend here. I mean, if you're doing short term, yeah, that might work. You know me, I don't do anything short term, and not any longer. I used to. I never day traded, but I used to get into trade for like a week or so. Week to couple weeks or so. I don't do that any longer, and you know that didn't work out. I mean, you know, it just went back up. So I mean, you did that very quick, then yeah, but I don't like doing things very quick. I'd rather, you know, go long here and maybe get that, but I mean that still, it wasn't that great. But you know, rather there's much more to be made to the upside than, you know, just pull back. That's just what that was. Is if I get rid of all that, low, higher low, and higher low. That's what it was. That's what I'm talking about. Right? I like to use daily, weekly, stochastic to confirm my bias. Again, you know, whatever works for you, you know, keep at that. I personally don't use any indicators and oscillators for buy or sell signal. I always say that price action is the king. Everything else is a subordinate to that price action. So if price action doesn't confirm, I don't care what the indicators do. They are just a confirmation tool for me. So let's say price action gives me, you know, good confirmation, and then I look at my indicators and oscillators, they are healthy, then yeah, that's a confirmation. That's a supporting idea. That's subordinate to the price action. Hold on a second. I'll be right back. Okay. What time is it? Okay. So, all right. So let's go to Tesla and Apple here. Something we do on every events. Let's look at Tesla. We have 3% gain today, which is a good sign. You know, it is Tesla refused to make new low. Good sign. However, we're still in a lower high, so I don't want to be part of this. At least it wanting to get above here. So I've been saying that for quite some time. I don't want to be involved in this because I mean, who knows? It gets up here and then it's still in a downtrend, and so I don't want to be dealing with this until 229. So let's not spend too much time here. Let's go to Apple. What was the question again? Is it bear flag on Apple? That's what I'm saying, is that obviously it's not bear flag now. Obviously bear flag, it wasn't bear flag yesterday. This looked like a bear flag, and then it didn't work out. It didn't lower. Same thing, this looked like a bull flag. It didn't work out. Why didn't it? Why did it just do that? You know what I'm saying? That's why we're trying to figure out the minor term swings. It's gonna want to pull your hair out. It's seriously, because these flags, bull flags, bear flags, they're like almost 50-50. I used to think they're like 65% and stuff. They're like 50-50. I mean, this worked out, like, you know, there's like a bull flag there and then being walked out. But why didn't this work out? I don't know. There's no reason being, you know, why this didn't work out, the bear flag. I really don't know. But all I knew was, hey, this is a reverse. Remember, I drew this last time, Fibonacci, and we respecting this level, 61. Well, actually, this is 38.2% retracement. For here, we traced at 38.2%. He was right on that 50 MA, right? And then we gapped up and sustained. And so looks like that could be a higher low as well. You know, maybe some kind of resistance here. Closed above that. Looks like uptrend support at the same time, right? Here, here, here. Don't be too obsessive with, you know, like it has like hit it. It's you know, it's just the vicinity that it's gonna be. So it looks bullish. We're above 1020 MA. You know, I didn't get involved. I really didn't get involved. I didn't know what was gonna happen. And plus with the Nasdaq was a little bit, you know, minor term, it was a little bit, you know, uncertain until today. So I have to kind of redo the analysis on Apple. I have to kind of look at it again and see when I want to go long. But I still have holding very marginal position that we close most of our position here. So I'm still holding a little bit from that. So I don't know where, when I'm going to go long on this. But I didn't add to that position. I was, again, you know, there's other setups that we looked at that we engaged this week and today, but Apple wasn't one of them. I wasn't sure. Yeah, like I wasn't sure if it's gonna do that and create a lower high, right? I wasn't sure. So sometimes, you know, you miss a trade or you miss a move, or if you're not sure, you know, you couldn't see it. You know, then sometimes you just have to let it go. You can't chase it. I'm not gonna, you know. So I mean, I don't know what I'm gonna go long here, but I'm gonna watch and see what it does. But definitely does look bullish. Definitely does look bullish. Looks like a higher low here, right on that Fibonacci, the first level of Fibonacci retracement zone. Possibly some of these levels are next target there. So I might find, you know, a place to go long next few days, but I would have to kind of watch, and I have to figure that out. I don't know what I'm gonna do right now yet. So what time is it? All right, so Apple is joining Dow starting tomorrow. Any thoughts on what will happen going forward? I don't know. I really don't know. Apple joining Dow. I mean, I don't know. What does that usually happen? I really don't know. I'm not good at that kind of stuff. You know, I'm good at reading charts. I'm not good at those. I don't know. I don't have any thoughts on that. I knew that you know, Apple's joining Dow. I mean, maybe that could help Dow. You know, Dow's been kind of lagging in indicator of. You know, I haven't even been watching Dow, to be honest. One of the indexes. I mean, there are like a lot of indexes I watch, but I haven't even been watching Dow because it's been lagging. It hasn't been an effective index to gauge the market. It has been, you know, Russell. I've been telling you guys to watch Russell and Spider because so many people watch Spider. So Spider, Dow also. I mean, is a mainstream name. Dow Jones. Everybody watches it, but it's just been so laggy. And so now that Apple joining, that could, you know, be more responsive. I don't know, but I don't know. Do I like XLF? Sherry, you should know this. I gave you the setup last week, a few weeks back. Do you guys remember the setup I gave you? Okay, that's good. So here's a setup that I gave. I gave you setup 2 weeks back. You know, some of you guys stayed with him for like 2 hours. I think that was the longest live webinar I've done. The 2 hours and the setup that it was like, you know, probably was down here. I said we gotta make sure we stay above 2450. So this day right here, if you stuck with what I said make sure it stays above and close above, and then make sure next day next day, make sure it stays above 2450. So if you didn't listen to what I said and you went long because it was looking bullish during the day, well, it spooked you a little bit, right? It spooked you a little bit, and you might have even gotten out because you got scared. And then that's what market loves to do. What the market loves to do is that it's going to spook you, it's going to make you scared, and then it's gonna go without you. It's almost like market knows you. Don't you hate that feeling? Like I used to have that feeling all the time. I don't get that anymore. I love position trading. Anyway, just every time I do something, it does completely opposite. Like it's like it knows me, like it's watching me, like I know what you're gonna do. You know, and so if you followed my setup, you would have gone long either yesterday or today. So you didn't have to go through the headache of this, and then your stop would have been somewhere down here because that's the higher low, right? Weighted, okay, good. That's good. That's very, very good. And something we talked about last week that, you know, this isn't a lower high. Remember we talked about that lower high, to become a lower high, it needs to come down here. So then that becomes lower high and lower low. This is a territory of a higher low, though we did pull back. It lined up with that level. Kind of, again, it's not in head and shoulder, but what's the important thing about this? This is not even in head and shoulder. Like textbook wise, if I call this infrared head and shoulder, I mean those like people who like, oh my god, that is not infrared head and shoulder. But if we look at a sentiment, what's important? We are no longer cultivating lower low. We created higher low, and we confirmed today this is the initial confirmation. So be aware that this could do something like that, okay? For a full confirmation. So now we created a higher low, and then we got higher high today, minor term. This is a higher low intermediate term. This is a higher high in a minor term. Now, so not only you have to understand the minor term, you also have to understand intermediate term. So that's the, yeah, we're in it. This is one of the things that we did, and I think our next target could potentially be, let's see here. Let me do some target analysis real quick. So that is perfectly coinciding with 138.2% Fibonacci expansion. Is also note that you can see that we measure that, we pull back exactly to the last level of Fibonacci retracement zone, and then when it goes back up to that level, 138.2%, which is coinciding with that measure target. So that's a good target there, about 26.45. Whole time, I'd say, you know, a month or 2 months maybe. If market lags a little bit, if it does a lot of consolidation, could be up to 3 months. Yes. Oh, okay. So we can look at Citibank. No problem. Citibank. Yeah, but similar looking there. It's interesting we came down to that. I really like to see this thing getting above this level, kind of, and then holding above that. If we can do that, you know, you can possibly enter, and you can place your stuff somewhere down here, and then you can do your, you know, analysis on Fibonacci analysis and your measure moves, and you can find out your targets, and you know, and kind of, you know, use financial sector as a whole as where the banks are going. But yeah, I like that higher low. We just need a new high. This wick there, you can see that wick, it is giving us that buyers try to go, you know, run for it, you know, but it didn't do. Pull back, possibly bull flag. So I would like to see this thing kind of getting above that. And it's a little bit difficult, this one. It's gonna be a little bit hectic than financial sector XLF, because we have resistance down here as well, up here as well. So it's gonna be a bit hectic, this one. I rather stick with the XLF than Citigroup, because I mean, who knows what we can do. And then, you know, I mean, I'm not saying that's what's gonna happen. If financial continues higher, you know, more likely Citigroup will join. But it's a bit hectic. It's a little bit hectic here. So I wouldn't think that You're very welcome. Starbucks, we'll go to it. We'll go to Starbucks. So, okay, so we got 1 hour gone by. Okay, so 50 minutes actually. So I promised you I will give you guys updates on some of our positions. That's not all of them. We're holding up to like 15 to 20, I believe. But those are the ones that are, and we talked about a few weeks back, setups we talked about. So I'm going to give you a little update on that. In position trading, how do you determine your target? It feels like by the time enter you close to the top, very little room to run. Again, that's a whole lot of question. That's a good question. That's something that it's gonna take. If you want to fully understand how that work, you're gonna have to. I mean, I do have how to position trade video. You know, not for the blog, for the members. It's 1 hour. So for me to explain all that and make you understand, it's gonna take me about an hour because it's not that simple. So here, I'll show you how I did on Starbucks, so then maybe you can understand how I did it. Starbucks, you know, Starbucks, we entered right here. Okay, we enter right there, and our stop was down here. Okay, so reason being is because we created a higher high. This was a higher high, right? And we're on a higher low, so we're still going up, right? So we enter along there, and then it pulled back, but we needed to hold this gap area. We got gap here, right? And it never triggered our stop, and then that's the move that we had, right? Same, you know, Boston Scientific did much better. We actually went long right here. Our stop was right here, and so that's just kind of showing you what we are currently in. I can, you know, and so when you say how to determine your target, it feels like the time you enter it close to the top. So when I enter here, I mean, where are you thinking as a top? I mean, I'm still holding this. Where are you thinking is a top? Do you thinking that this is a top? So you know what I mean? It's just the way you. If you're looking at things like very, very closely, like, you know, like hourly chart or something like that, or you're looking at like very, and you think that that's the top. That's not the top. That might be a resistance, but that's not the top. So what you have to understand when you're position trading, I'm trying to make this into a much shorter version. What you have to understand, you first have to understand all types, you have to understand the minor term so you can enter, but you also have to understand the intermediate and primary term, and and obviously, like Boston Scientific, I didn't think it was going to do this. I really didn't think they were going to get here that quick. You know, because I had a target price of 20 by end of 2015, and we're like in 18, and we're in March. So I mean, like, it's not that, but sometimes things work out, sometimes it doesn't. You know, it's one of those things that worked out for us. No, so that's why. So I think the mindset that previous resistance being the top, so you gotta remove that. You know what? Hold on a second. The reason I keep going back and forth is because I have a fan on. When I speak, I get hot. It's weird. So it's starting to get cold. So I think you have to remove that that mindset that because probably you've been doing a lot of day trading, short-term trading. So once you go long here, you get here, you're like, oh my god, and you got that. You're like, yes, I made that, and then that's my top. So you've done it for many years. Then you gotta break from that. You gotta break free from it. That bondage. That's the bondage. You gotta break from it. Stop looking at the market like that. You gotta look at the market. Let it move, right? But obviously, you have to forecast it right. You have to analyze it right. You have to understand the minor, intermediate, and primary term trend. Sometimes use Bollinger Bands as a range. See, I don't have a Bollinger Bands. It's not, for position traders, Bollinger Bands is a hindrance. Bollinger Bands, it tends to work in the short term. It gets to the top, and then it turns. Did you know though? This here, I'll tell you this. I'll tell you something about Bollinger Bands. This is a misconception of Bollinger Bands. I'll right now tell you. Do a little research on Bollinger Bands. The creator, right? What's his name? Bollinger. Forgot his first name. His last name is Bollinger. I believe he's still alive. John Bollinger. James Bollinger? I think it's John Bollinger. Yes, John Bollinger. He's still alive. John Bollinger, right? So when he first created, Bollinger Bands, he did not create it. Here, that's a Bollinger Bands. Did you know that John Bollinger, when he created Bollinger Bands, he did not create Bollinger Bands so that when it hits the top of the band, that it is supposed to be a resistance. That's what I'm saying. People say all kinds of stuff online, and you learn these things, and then you think that's what it is. John Bollinger, when he first created Bollinger Bands, he created as long as it is above that upper band, and it stays that upper band and stays above the middle band. We are in an uptrend. Stick with that trend, keep riding it until it breaks below the middle Bollinger Band and gets back down to the bottom of the Bollinger Band or middle Bollinger Band, right? As long as it is sticking to that upper Bollinger Band, it is considered as in trend. It is not that you hit the top Bollinger Band, well, I'm going to get out because, well, it's resistance. That's not how you use Bollinger Bands. So many people have this misconception. It's because so many people are short-term trading, day trading. Most people look at it like that. I know somebody who uses Bollinger Bands a lot and put out his video and uses Bollinger Bands in his chart, and that's how he says it. That's not how he's supposed to use. You hit the Bollinger Bands as long as as long as it's riding the top of the Bollinger Bands, it's in an uptrend. What you should be cautious about is if it breaks below the middle Bollinger Bands, the line, that's when you should be cautious. But doesn't mean that it's time that the market is going to reverse or anything like that. Watching market too closely, tick by tick, every single day, and you're sucked in emotionally. That's what it's going to bring in. Like, oh my God, because you cannot handle just few days of pullback. The biggest struggle as a position, if you want to become a true position trader, let me remove that Bollinger Bands. Oh my God, I just put in another one. Get out. I used to use Bollinger Bands, but in position trading, it's not that important. Dang it. Okay. Still there. It's bothering me. Okay, you see this pullback? How many days was that? 1, 2, 3, 4, 5, 6, 7 days, right? 7 trading sessions, right? I held all of our positions. All of us did. So some of our positions were making money, and when market pullback, they were actually that gain was diminishing, right? You see, that's the mentality. Is that, oh my God, that's the gain, that's the main move, that's the money that I made, and then now it's diminishing. You know what I'm saying? It's that mentality is gonna further you from actually position trading. You know what I mean? So that's the hardest part, and that's why most people cannot go over that hump. That's the reason why most people you see on StockTwits and Twitter, they are short-term traders, very short-term, couple days, maybe day traders. Again, I'm sure there are some very, very good at what they do. I'm not knocking them out, but some are very just don't even, don't listen to some. I remember I heard Hitler said, if you lie to someone long enough, they'll start to believe that it's true. If you lie to somebody long enough, they'll start to believe that it's true. That's kind of was his motto, right? So if you believe the citizens or people, general public, certain things, and you keep saying it, even though it's a lie, you keep saying it, general public is going to start to believe that it's true, right? So if you can understand how they can manipulate the massive, they can able to control the mass, right? If you can manipulate the mass, they can control the mass. Again, I'm not saying that these guys are control. What I'm saying is they probably have a good meaning to what they do. But if you keep hearing these things, Bollinger Bands, we're hitting the top of the Bollinger Bands, and and that's worrisome and that's concerning, and you keep hearing and hearing and hearing it. Oh yeah, I started hitting the Bollinger Band, so I should be worried. Now it becomes a truth to you. Somebody somewhere has to tell the truth to break that, right? La 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 la. John Bollinger, right? So now you guys know how to use Bollinger Bands. John Bollinger, trend trading. That's how he created it. As long as it stick with the top of the Bollinger Band, it is considered as an uptrend until it breaks that middle band or middle line. Then concerning. But BXS went below. Okay, let's see. Below and then continue rising in May. I'm turning into position trend trader. I like this style better. Yeah, right. So, what I tell you is that you want to become a position trader or anything. That was a great lesson. Thank you, thank you. If you want to become anything, not just like trading, but even life, you can flip flop back and forth. Once you said, you know what, I'm gonna become a position trader, you do it until you master it, right? You just say, well, it doesn't work, so I'm gonna go back to swing trading. Well, it doesn't work, I'm gonna go do day trading. You go back and forth, you're gonna lose a lot of money, you're gonna lose a lot of time, you're really never gonna master anything. You're very welcome. You know what I mean? So stick with it. When I first opened my, blog back in summer of 2012, I was a swing trader. But my swing trading was longer than most people though. I always say 1 week to a month. 2 weeks, actually 2 weeks to a month. That's my time frame. Swing trading, 2 weeks to a month. If you go back to my old trade setups and stuff on Apple, it's about 2 weeks to a month, pretty aggressive. Here, I'll give you a story of why I turned into position trader after that. I started to realize I would have made more money if I would have just kept holding longer. You know what I mean? I was making money here and here, I went up and down, and then I made money there, and then I have to, what I didn't like about it is, once I get that run for a month or so, I have to kept looking. It was a high maintenance. Day trading, oh my goodness, I can't do that. I cannot do that. It's just, oh my God, looking at, you gotta find setup every morning, you have to look at your target just within a couple hours, and then you have to get out and you look at it again next day. Oh my goodness, I can't do that. Swing trading though, you do it for a couple weeks, a month, and then you look for setup again, and then weeks, a month, look for setup again, right? And that's still cool. That's still, it's still a bit of high maintenance. You still have to watch it in the morning at open. With the position trading, Boston Scientific guys, I got long here, and soon as we got above this level, and I started, I wasn't watching every morning, but once we started creating higher high, this whole time, how long has it been? Since January. So about 2 months, I watched maybe 10 minutes a day just to look. Sometimes I don't even look at all. Sometimes I don't even watch it at all. And I think not only you make more money doing that, but you have more free time, which means you can do other things you like to do. And I think that's why we do, right? You want to have a successful business because you want to have more time for your family and friends and for yourself. Not that because so then you can sit down in your computer tweeting all day, every minute, every second. This is what the spider's doing. I don't have time for that. I'll be honest with you, doing this midweek update on a weekly basis, I'm it's kind of tired. But I'm still young and I'm still, still a lot of time, so I don't mind doing it. But as I get older, if I have a wife, I'm probably not going to do this that much because I want to spend more time with my wife. I want to spend more time with my family, So I love position trading. I really do. And I think more of you guys should do it. But it's gonna come with the cost. Coming out of your comfort zone and your habit, it is the most difficult thing for any man to do. That's why losing weight is the hardest thing to do in America. Why? Because man, you've been eating this thing and you've been finding comfort. And now you can't do it anymore. Now you have to exercise. That's why. That's why we have obesity problem in America. Because they are used to something and they have to change that. So when you've been used to short-term trading and day trading, swing trading, and you want to change the position, if I tell you right now, hey, you sign up my service, I'll guarantee you make money, I'm a liar. Because that's not true. That's why people say, you buy my book, and guarantee you'll lose 60 pounds. I was watching documentary the other day. Did you know that all these diet industries, 15% success rate, 15. They actually researched it. So 100 people do it, only 15% actually come out. And then that's what they, market. Look at this people, look at that people, look at this guy. Look at Steve. He lost 50 pounds. Look at Joanna. She lost 60 pounds. Those are within 15% of people. Yet, diet industry is one of the most prominent and most, one of the biggest industry out there. But this is like that in everywhere. Not just people want something and there are people out there trying to manipulate your weakness and your vulnerability because you want it so bad. They'll sell it to you and you don't get any result. And when you don't get any result, something's wrong with you. Right? Something's wrong with you. Look at these people. They work. How come you didn't work? There are people, when I first trying to learn trading, and I was getting some courses and stuff like that in technical analysis, and these people told me that anybody can do this part-time. Anybody can make money trading technical analysis. That's not true. That's not true. They're selling their stuff. They're marketing. That's why I tell you, even if you sign up, and if you have guts for it, if you don't have a gut, you'll follow all my trades, but you don't have stomach for it, and plus there's still probability I might be wrong. There is probability I might be wrong. There are people who can stomach it. They can't stomach the pullback. And a lot of times it's because they're not honoring my, or certain position sizing. That's also important. Make sure you don't go too much. But it just, everybody's a little bit different. Everybody emotional level is a little bit different. So I cannot promise all my members that you follow me, you'll make money. I can't. It's not for everyone. Some people just don't have that emotion, don't have that kind of stomach. That it's not made for everybody. If everybody can do it, everybody's make money. So you have to understand that. This is life. And what I try to do is I want to be the voice that who tells you the truth. Who tells you the truth. I don't want to be that, that diet industry tell you, you buy my book, you sign up for my service, you will lose 60 pounds guaranteed. Yet the research has shown that only 15% of that people see some kind of result. So there are always people out there, telling you what you want to hear. I like this verse. I like, thank you guys. I like this. I'm sorry if you guys are, I'm a Christian, so I like this verse. It says, wounds from a friend is better than kisses from an enemy. You know what I mean? What it means is wounds, right? You get hurt. Sometimes it hurts. Wounds from a friend is better than kisses from an enemy. Enemy is going to tell you what you want to hear. But true friends will tell you what you need to hear, and it hurts. But that's the truth. This is life. Everybody one of the stupidest video I've ever seen. He's not prominent, but I don't know. Somehow I come across this guy on YouTube, right? He have the sunglasses on, right? He had hip hop music in the background. What up, traders? Yeah. we're making couple G's today. I'm like, oh my god, what are we coming? This is what we become, right? And some people are like, yeah, man, he's awesome, you know. Or some traders showing this exotic lifestyle, you know. It's all there to lure you in. Don't you know that? When somebody starts showing you their watch or their, you know, their cars and stuff, or somebody have to act like that, like they're a rapper or something. Gotta be smart in this life. And I want to be honest. That's why I want to tell you the truth. There are voices out there, kisses from an enemy. The reason I like to do this is because there's somebody did that for me about life, about faith, told me the truth, you know, and understood. And I'm like, you know what? Everybody telling me lies. Everybody want to buy, you know, sell me stuff. But you know, I appreciate you telling me the truth about life. You know, and I want to be that voice. I think, you know, we all have a, you know, something I always say, that we all have strength and weakness in our life. This is my strength, so I want to share it. You have strength, something else that other people don't have, and you're supposed to do that to others. And I said that last time too. You know, even if it's just your friend down the road or something. You know, sometimes you have to tell them the truth, without judgment, without looking down on them. You know, with the attitude that you want to help them. I don't even. How do we get here? We're talking stocks, and then all of a sudden became a sermon, and so again, it's this whole thing, you know, it's funny how this world works, but be careful out there and do your research, and, you know, don't listen to everybody. And when you're desperate, when you're emotional, there's always people who wants to sell you something what you need. So, anyways, as you must money to get. Thank you guys, thank you. So, okay, so what time is it? All right, let me go through this quickly. We'll end this meeting. So basically, you know, you can see we're you know, when this happened right here, right? This is what people have a hard time, is that pulling back, losing some of that money, right? I have only 2,000 is okay. I don't understand that question. What does that mean? As you must have money to get started within you. I have only 2 grand is okay. I don't know what that means. You have to clarify that. I don't know what that means. So Starbucks, you know, we're still in an uptrend, so you know, we will continue that. And this is not, I don't think this is a level that you enter. You know, the best level was up down here when it kind of, you know, you can see this was that important level. You know, it was old resistance, new support. Right, we got to this resistance, pull back, created higher low, right? We no longer creating lower highs, lower lows. It became equal lows, and then, you know, came down, went up. So looking good there. We're still in an uptrend there. Boston Scientific, just kind of looking back, same thing. You know, this is entry there. Why was there entry? Well, we talked about it a few weeks back. Lower highs, lower lows. Right, no longer did that. We went up, came down, created a higher low. We got up, minor term consolidation, a breakout, initial breakout, full confirmation of that minor term initial breakout, a little bit of bull flag, a little bit, and then got a consolidation again, and then got a pullback. You know, if I was to swing trade this, it's very, very difficult to, you know, do that. Especially these gap ups, you can't ride that when you're swing trading. So only way you can fully ride that is position trading. One other thing I forgot is one other thing why I love position trading is you can, you know, when there's a gap ups like that with the news or earnings, there is potential that you can have a huge jump. Because when you're swing trading, I always got out before the earnings because there's too much, you know what I'm saying? When you're position trading, because there's so much tolerance level that you hold through earnings. Earnings 50-50. I mean, nobody truly knows what's gonna happen. But usually, my theory in earnings is that, let's say this was a news though, but let's just say that was earnings, and then let's say this thing gapped down, right? It gapped down significantly. My theory is that if it's an uptrend, it will gap back up in time. That's my theory. We might have a huge gap down, but if it's an uptrend, it will gap back up slowly. But if it's a downtrend, look at your Apple and study your Apple chart. And I don't have time to go there. Study your Apple chart. When Apple chart in 2012, 2013, when the Apple's on a downtrend, we got earnings gap up, and then it comes down afterwards. And look at when after Apple bottomed and when it got back up, and Apple gapped down on earnings and it goes back up. Go back to this is your homework. Go back tonight and check your Apple chart from 2012, 13, all the way to 14, 15. When in the downtrend, when Apple gaps up in a downtrend, it comes down. But when Apple gaps down in an uptrend, it goes back up. That's not always the case. That's my theory. That there's a high probability when we're in an uptrend, we could have a gap down on earnings. It will slowly gap back up, make up for it. Does that make sense? Oh, you're asking, is it okay to invest with, invest with me if you only have $2,000? That's bit, yeah, that's, I mean, you would have to, the only problem with the $2,000 is that because I get into, leaps, like I get into options that are like year out. They're very expensive. Plus I get into deep in the money. So they're very, very expensive. Those are probably one of the most expensive options. So you can't, some of the options are gonna be a couple grand. So you can't just use all your money in one. So what you have to do, if you wanna really do that, you could still do it, is that you would have to start buying shares. And you gotta work your way up. But with the $2,000, with the subscription fee that is gonna go out, which is gonna be like 10% if you sign up for On Air, that's $200 a month. That's a 10% of your investment. I mean, you're losing 10% every month just to pay me. I don't know if that's gonna be enough. I think $20,000 minimum to 25 to fully follow my trade. Everything you will need $100,000. But I do have a video lesson how to how you can do that with a smaller account. Shout out to the reppers with watches who trade the markets. There's two types. There's two types of subscription. One subscription is a VIP. It's a real time alert. So you just follow what I do. You get real time trade alerts. Another one is $200 a month. I tell you how to trade it. I tell you how to. I give you setup. I get setup video, and I'll tell you how to. There's engage. The setup that I gave you on XLF, right? I told you this is a level. Make sure it stays above that. Do this and do that. That's there are two different subscriptions there. So Pfizer, Pfizer, I mean, again, we talked about it last few weeks back. Again, Pfizer is gonna have its volatility, but did that make me worry a little bit, right? I mean, a little bit, but we said, hey, this is higher high, and we're still in the vicinity of higher low, and then got up, and then higher high and higher low. So, look at that. We're still in a trend. The hardest thing from day traders or swing traders to become position trader, they cannot stand these days. They cannot stand those days. They don't have stomach for it. So that's what I said. It's not for everyone. This is not for everyone. You can sign up and you start doing this and then start pulling back. I said we're still in the vicinity of higher low, but you just can't deal with it. Then it's not for you, we're still in an uptrend though. We're higher lows and higher highs, so that's what we held through. See that a lot of times when there's this kind of pullback, bigger moves coming. Not always. Many times after, I always say, I use the word embrace this pullback, because after this pullback, bigger move is coming, right? Embrace this pullback. Can this pullback become just rollover? Yeah, anything can happen in the market. If we did that, left shoulder head, right shoulder confirmation, full confirmation, yeah, that could have done that. But we didn't have that, did we? So let's not worry about the data that is not there. Let's talk about the data that is currently there. Even when we're here, right? We're still in the vicinity of a higher low. I would have liked that if it bounced here though, that would have been more like a high low. When it came down to kind of made an equal lows a little bit on this day, it made me a little bit worried, concerned. It's not like I'm gonna lose my sleep over. No, I slept great. I don't care. You know, it's just like, you know, if it doesn't work out, it doesn't work out. That's the mindset you need. It's a fortitude that you need to become a position trader. It's that mental strength, and mental strength is something that you can acquire. This is kind of like a, you know, your when you go to gym and you work out, you know, you can gain your muscle. Same thing with your mental strength. And for you to gain the mental strength, you must subdue your emotion, right? People who just get angry because somebody just looked at you funny, those are the people who has no mental strength. They just get in a fight because stupidest things. Okay, 20,000 as soon as I can bring this here. Yes, 20,000 will be a whole lot better, because then you would have, you can able to get into some certain options, like one contract, you know, certain contract, you know, certain contracts, you know, like Spider, I think, Leaps, they're like, you know, I don't know right now how much they're, like 700 per contract, so you can do that. And then if they are too, like certain contracts are too expensive, because we have to make sure we have to manage your money. There's also portfolio management lesson that I put out. It's like it's 1 hour lesson that I tell you how to manage your portfolio. So certain options are gonna be too expensive, then you have to buy shares, because you gotta make sure you gotta position them same size. There's a reason for that. I don't want to get into it right now. There's a reason for it, why they have to be all same size. You're very welcome. Just email me or something when you're ready, and we can work something up. So let's look at LinkedIn. Yeah, we pull back a little bit. You see, you know, people freak out once we break below that, but we're still below 1020 MA, so maybe there's some resistance here, some kind of resistance right here. But I held through all of this. I didn't close anything. I'm still holding full positions here. This is where we entered. And I'm just gonna hold. And if the market continues higher, which I think it will, it's gonna have its ups and downs though. In the minor term, I believe LinkedIn will do well. We're still in the territory of a higher high, right? So many people want to quick to call this bull trap, and this time we pull back though. This was bad, but weren't we still in the vicinity of higher low? We were. Weren't we? Low, higher, low, higher, low. And if I wasn't trading at the time. If you embrace this pullback, oh, the run you could have enjoyed. That's life. That's life right there. You know what that is? You go through struggles in life. You go through the suffering in life. You work hard and you go through those times. The good thing can come. A good thing can come. You know, it could take years to master this. You can't just expect that you're gonna get good at something just, you know, in a year. That's not gonna happen. So LinkedIn there. Toyota Motor doing great. We're holding full positions here. We enter up here, pull back, but this was a support. Bit worried a little bit when you got to that level. But what I said was, hey, we're still holding this level. Let's see what happens next day. We went up, came down, get up, came down, get up. And then when this happened here, I was thinking, you know, I should have closed a little, because I thought about close some here. I thought about it. But we're still in an uptrend, I thought. Because my target wasn't there. My target was, I think, 144 or something. And I said, no, you know what? No, I'm going to stick with the uptrend. We're high lows and higher highs. So we're still holding full position here. So Toyota Motor doing well. You know, we've been holding since late December, so about 3 months now. But I think about 144 will close about 50% to 70%. And, you know, again, you know, I'm not trying to show off or nothing. It just worked out this this early this year. It worked out for us. I mean, it just sometimes sometimes there are bad calls and sometimes there are good calls, and it's just it just worked out well. And so any questions on anything? TM go to 17. Wait, what time is it? Was it TM go to 175? Well, that would be, I mean, I don't know, maybe by end of the year if the whole market is bullish, but when TM does move, they can move, but I don't know right now. Maybe. So yeah, that's about what I have. And you know what, I had some questions, or people giving me a lot of inquiry on membership and stuff like that. I usually don't even talk about it unless people ask me about it. There's a link there if you want to sign up for monthly plan for the on-air membership. 15% off. So you can use that link there. People ask me, why don't I ever have? That's the thing about it, is I'm not doing marketing. I'm not here for marketing. That's the reason why I don't have this. You know what I'm saying? So, but there. So you ask, you have there. If you want to, again, it's not for everyone. Just because you follow me, I cannot guarantee that I'll make you money. I'll make you a millionaire. I'll make your portfolio next couple years. It will double and triple if you follow me, if you subscribe. I can't promise that. I can't. All I can promise is I'm gonna continue to follow a trend, and I'll try my best to educate and let you know and what the market is doing. I'll do my best, but that's the reason why last year was a slow year for us. I was completely wrong on silver and gold. I was right on treasury bond all year long, and that's why that salvaged my account. I was still able to beat S&P 500 with 13% gain, but I was dead wrong on silver and gold, and I know why. I didn't wait for a full confirmation on that. I was a little bit hasty on it. Though we had we had the best signals on gold and silver. That taught me something. That taught me something. Price action is the king. I've never seen those kind of signals. Everything was connecting on gold and silver, right? One thing missing was we're still in a downtrend, so I was expecting that it was gonna come out because we had oh man, I have not seen that kind of monthly bullish divergence, weekly bullish divergence. There's certain patterns, and everything seemed to be just perfect, and then never worked out. Because of one thing I neglected, what was that? I did not wait for a full confirmation of a bottoming. See, then I learned you must respect. Price is the king. It doesn't matter how much signals, indicators, oscillators you have, it's nothing. That's what I learned from that. So I'll never make the mistake ever again, right? Suffering, a struggle can become a good thing. That's exactly what happened to me. I believe I became a better position trader after that. And I'm actually glad that happened. So, yeah, and so if you want to sign up, go ahead and use that and sign up. It expires tonight, and, and I have 30 plus lessons, because I really want to teach it. So that's, I don't know, that could be over 30 hours. Everything I know about trading, from how to draw your charts correctly, how to look at your patterns correctly, how to identify higher lows, higher highs, intermediate term, primary term, minor term, how to manage your portfolio, how to position trade. Psychology of trading. These are hour and a half, probably 30 to 30 hours or more, or about 30 hours of lesson that I put up. So it's all there. You can watch that to learn. So that's if you want to sign up for that, you can use the link there. So any questions before we call it a night? Thank you for everyone for staying through. No questions? Well then, well, enjoy your, you're very welcome. Enjoy your day. You're very welcome. Thank you everyone. Enjoy your day, and I think the market will probably continue higher, and it's gonna have its ups and downs. But if you ask me, like, okay, what do you think? Like, you know, if I just guess, right? I think we're gonna have 2 years of bullish run, but I'm not looking at the chart. I can't, you know what I mean? That's just, you know what I think it could happen. But with the charts though, looking at the charts though, I think you know, a couple months of bullish run, and at least till summertime, I think we could have next few more, you know, with ups and downs in a minor term. We're gonna have go up, we're gonna have a pullbacks, and we're gonna have all that. But before like pretty significant pullback, like we've seen like October, September, October, November last, something like that, or some like, you know, some like 3 months consolidation, we might get bullish run for, I don't know, until summertime, maybe until May or so. That's what it looks like, and I'm actually getting that from mid caps and Russell. Looking at the Russell, looking at the mid caps, I think we might see a bullish run. Again, it's gonna have its ups and downs. It's going to go up, it's gonna come down, it's gonna do that in a minor term, possibly even intermediate term. But I think it's gonna continue bullish run, you know, next few months or so. And again, you know, I will look at, you know, on midweek update events, or next we'll do video. We'll look, we'll look at the video, and I'll let you know if anything changes. But it doesn't look like it's going to. It looks like the market wants to continue higher. 2 more years. That's just my guess. So don't quote me on that. Please do not say that that's what Kay said. Don't quote me on that. But that, you know, we'll look at that. Actually, if that happens, then I guess it happened. But we don't have to. You don't have to know that, right? We don't have to guess that. That's the beautiful part about it. When the market tells us the market is topping out, it will tell us. It will give us the signal. It will insinuate certain signal like that. All right. Again, I hope that you guys enjoyed. Again, I wanted to be a voice of truth, and you know, I wanted to tell you the truth. There's so many people telling you what you want to hear, and that's how they can control the or how they can get the masses, interest. You know what I mean? Attention, right? There are all these promises that doesn't deliver. You know, you gotta work at things. You can't just, you know. I actually, okay, you wanna learn about here? If I gotta let you know, you wanna learn about losing weight? I actually lost 20 pounds. I used to be a little bit bigger. You guys, I didn't actually. I never had my. I was never live like this. You couldn't see me before when I did these events, so you never saw me. But I was actually a bit bigger, I mean, I was never fat, but I was a bit chubby. I had to buy new clothes because they couldn't fit. I'll tell you how I did it. Okay, it wasn't some gimmick, right? It wasn't some gimmick. It wasn't, it wasn't none of that. What it was, changing lifestyle. So what I did was, first of all, I started eating healthy. So when I would go, I was okay. First of all, no more junk food, no more fast food, never ever, right? And minimize going out to eat, like, you know. So I would do that like maybe once a week. I'll try to cook at home, right? But when I go to Whole Foods, right? And I try to get most organic stuff, like grass-fed stuff. And obviously, like eggs, I get organic, free range. I also did a research on it. When they say, what's the other word? It's not free range. They say range. Dang it! There's another word. It's trap. You gotta research on those. It doesn't say free range. It says there's another word for it. Dang it! I can't think of it right now. Range, not free range. No. What did they say? Dang it. Anyway, so free range. That's the one you wanna get. There's organic. There's another one. But you wanna get a free range. That means chickens are running around without range. They can run around, right? It's not open range. It's no. Dang it. You gotta be careful though. You can buy organic, but buy free range. Do your research on those chickens when they're stressed out, because you know how they're clammed in and they're growing up and they're never able to see the daylight, and they're just like clamming there. So their stress level goes up, and so there's a toxin in that egg. That's why it's so bad. So free range. And again, I started doing research, I started eating healthy, and then I started juicing hardcore, like hard kale and like spinach, and I got this nice juicer, slow grinder juicer, not like the one that spins so fast because it kills enzymes. So I did my research, so I got this it's expensive, but it's worth it. This slow grind juicer, right? The one that I got is Omega VRT 350. So slow grind juicer, and then I started juicing, doing that every day. And then I started exercising every day, right? Like running, and so I changed my lifestyle. Again, it wasn't easy. It wasn't easy. It was hard. Like I couldn't sleep at night because I felt hungry. Like because I want like cheeseburger. I want like chips. I want ice cream. I want like hot wings, and but I say no more, right? No more. And then so I changed my lifestyle. And then here, your focus for losing weight, it shouldn't be losing weight. It should be being healthy. When you start thinking about healthy, you lose weight. That's a byproduct, right? So we're technical analysis here. We're talking about losing weight. It's so funny. Anyway. It's funny what we're doing here. We're preaching on certain things. We're talking about losing weight. But anyway, so I started doing that. And then just out of nowhere, all of a sudden I lost like 10 pounds. I was like I was like 165 or so. And then I was like 155. And then all of a sudden now I'm 145. And then, yeah. And then it's funny, once you change your lifestyle, like you're not always gonna be perfect. I mean, sometimes I go out to eat with my friends. I love wings. I shouldn't get so many of them. I love wings. I love everything fried. I get everything fried. Once in a while, go out and enjoy it. But what happens is, let's say on Saturday night, I go out with friends, get a lot of beer and get some wings and just have a good time, right? And then when a Sunday rolls around, I wake up in the morning, I feel a little bit something. I can tell because my body is very sensitive now. And then I start running. I start running, and then in the morning, and then I come home and I start juicing like kale. I juice like ginger and spinach and some apples. It's green, and I drink that, and then I wait a little bit, and then eat like healthy eggs or something like that, and then like dinner time I cook like stir fry, like organic chicken, broccoli, carrots, and mushrooms. You don't even have to have a sauce. Just put a pepper and this is a cooking class. Pepper and salt and and just and it's great. And when you start eating healthy, what happens is it's not the taste. Obviously, when you get like cheeseburger, pizza, when you eat it, you get a full that pleasure. But when you eat healthy food, you don't get that full pleasure. But after you're done eating, what happens is you feel peace in your stomach, and you can feel that joy. You can feel that energy. You wake up and you have energy. So you like that so much. So this is what happens. Fast food, going out to eat, you feel so great when you eat it. Chinese buffet, right? Or they have a lot of sushi buffet nowadays. Buffet, you eat. When you eat it, it feels great. But think about next whole night. How do you feel? You feel bloated. Next day you don't feel so good. You feel tired. You have no energy. Versus when you eat it, healthy food, it's not as like full flavor, not as like super like that I don't know how I can explain it, but it's that clean taste though, right? But it's not like there's like, oh my god, the fat and juicy, and it's not that. But afterwards, you get that. So think about it as investment type, right? So do you want to have a happy time for an hour and then like crappy time for next 5 hours? Or do you want to have kind of a plain, simple, organic, healthy food. It's not too great, but it's okay. And then, you know, you might not enjoy 1 full hour of a juicy, greasy, fat, that kind of stuff, but you know that, and then you get that energy and peace in your stomach, and just that happiness, right, for the next whole day. So if you look at it as investment, which one's better? So I start thinking that way. If I eat McDonald's, I hate McDonald's, it's disgusting. But if I eat McDonald's, I might feel good then, but what's gonna happen later, you know? So think about which one's smarter, right? So that's the whole thing there with diet. This is awesome, right? We talked about cooking and dieting. I'm gonna go. You guys had a great night. We'll talk about other stuff next time. Have a great night, guys.